I'm gonna go by Side Income Dad. That is also my name on X in case anybody wants to follow me there. Chan, you want to go ahead and introduce yourself?
I'm just gonna go with the channel. No handle at this time being. It's still under construction.
Cool,
And I
cool.
am Migs. I can go by Migs. No handles either for now.
That's the same on OF.
Yeah, especially the moneymaker.
Right on, right. So you know what? Now we know what Meg does, but let's go into now let's go into what everybody does. So like really we're here to talk about investing. The three of us are all about Bitcoin and the different coin derivatives that are out there. Today we really wanted to focus on Misty, and so that's kind of what we're going to do. In terms of investing, I guess I'll speak for myself. I've probably been investing to some degree for the last 10 years. I've lost, I've won, so it's just like everybody, right? It's a roller coaster ride. But yeah, go ahead, guys.
Yeah, for me as well, roughly about, 10, maybe a little bit longer. All the investments I ever done was just mainly just growth stocks, tech stocks, because I find a lot of more return on investments with tech stock rather than anything else. Uh, Always thought about, the S&P 500, like everyone says, to just, dollar cost average into your, S&P 500, but I feel like it's just not in big enough growth for me at the time, being young and, able to take more risks, I felt like I had more time to recover if anything, were to go south or go bad. So for most of it, I've just been, investing in, tech stock, high volatility stocks, where I could get the most return. I feel like, more risk, but more reward until I stumble upon this, with you guys regarding these ETFs on dividend stocks. So it's just kind of opened up my minds to whole opportunities regarding, retiring and everything. So it's very interesting and I'm excited to jump into this.
As far as for me, um, like investing wise, I feel like I've known about it for like good 10 years, but like actually investing, not that much besides my RSUs and stock options and all those, ESPP, nothing to this degree where you can actually invest for income. And once I saw this, I was like, it's no brainer. That's about
Great,
it.
great. Thank you guys for the intro there. And you know what? I think for those of you that are not familiar with Misty, I'm gonna go ahead and share my screen and kind of pop it open, and we can take a quick look at it and maybe dive into that investment a bit further. The reality is it's a great opportunity, and I really think that we should dive into this a lot today because it's a big deal. A lot of people don't really understand it, and we'll try to break it down today. So this is the YieldMax website, and we're looking at the Misty Fund. And as you can see, this is what they've got distribution rate. It's pretty accurate, but don't be fooled by that by expecting that. We'll dive into that a little bit further. This fund started in February of 2024, and as you can see, it's been paying dividends pretty much every month like clockwork. It's an amazing fund. It's based on the MSTR or MicroStrategy. They just recently changed their name to Strategy, which is pretty much a Bitcoin treasury company. This is an amazing opportunity. I kind of just wanted to touch base really quick on some of these payments. Some of these payments may appear like, low, for example, like this $1.33 when you look at something like this one with the $4.04. But the reality is, this fund is constantly paying 6, 7, sometimes 10% of its like price a month. And I bring that up because Chanimal said that S&P 500 is what we've all learned to do, and I'm the same way. That's what I learned. We were told S&P 500, you follow that, you dollar cost average in, and you're gonna win. By the time you get to retirement age, you're set. You're good to go. You can enjoy some margaritas on a beach somewhere. But if you look at that, that's about what, 10% chanimal?
Yeah, about 10%.
Like 10% a year. Like this thing is giving you that every month sometimes. Like it's a crazy opportunity. And it blows my mind that I see people on X that they're talking about how, oh, this is a horrible dividend. Like, are you kidding me? Like this dividend is better than what you get in the whole year on pretty much any other investment. So, just because it's not always paying you the equivalent of 100% rate doesn't mean it's a bad investment, folks.
You mind a quick overview regarding what YieldMax is for those who, may not understand what YieldMax stands for or who they are? Just maybe a quick overview of what YieldMax is and explain a little bit how this fund works.
Yeah, absolutely. I think that's a great call out. So YieldMax, they're a company. I do want to say that they don't actually have anything to do with MicroStrategy or strategy. They are just a company that does option trades. And so this is not their only fund. As a matter of fact, let me go to the home and show you guys kind of all their different ETFs. Um, I think probably there it is, full ETF list. Ooh, you guys saw that? Look at all these ETFs. So they clearly know what they're doing. The people behind the fund are seasoned veterans. You can obviously come in here, read their perspective, so you understand the intention and the goal of each one of these funds. But all they're doing is option trading. That means that they usually sell covered calls. They have a synthetic position on MSTR. It's not actual stock, so they don't buy the stock directly. And then they do covered calls every week, and that's how they generate income. We'll probably dive a little bit further into that, but I did want to point out that they have tons of funds, and the three of us here are really looking to get into positions where we get weekly dividend payouts. We originally started with Misty because Misty's the goat. They pay really well, and it's a Bitcoin based company, or I guess I should say like fund, and that is where we really believe long term the money's going to be. But hey, it's also nice to get paid every week, right, guys?
Mhm.
So,
Definitely. Oh yeah.
so why not? Why not take some of that money and put it into these other funds? And that's going to be the gameplay. You guys want to add anything to that?
Pretty much everything that you covered is pretty good. It just I just want to say that there are other competitors, I guess you want to say, that are out there as well, just like YieldMax. But I think I don't know how long YieldMax has been in business. Do you know?
I don't remember. I think they've been in business, I think it was like 2020, 2021, something like that.
So
Tesla here was their very first fund, but
these high yield ETFs companies here, investing funds here, it seems like it's been, gaining traction or getting popular nowadays. I don't know, is that
yeah,
something you had the experience or because I had never really heard about stuff like this, right? When we're talking about dividends, like my perspective was always just, like investing in Coca-Cola where I get like, 5% return in a year or something, right? Something
yeah, yeah.
really low, and then nothing like this, right? So that's kind of more my perspective as if someone were before I knew about this, when someone would ask me. I know when you told me about this too, like my first perception was just like, no, no, I don't need 5%, right? I need to take big risks, right? So until I fully understand how this actually works, that's when I came on board. But all before that, like if you told me yeah, dividend investing for dividends, I would have been like, nah, not for me. So, but it does seem like, yeah, like correct me if I'm wrong, but these ETFs funds are definitely starting to merge out, and everyone seems to be getting on board because there's such a high yield.
Yeah, absolutely. And you know what? I love that you said that because I'm going to touch up on that a little bit. The reason why this is possible and why it's not something we did or saw in the past is because the laws changed. So the laws changed on what an ETF could be. And that law, again, don't quote me here, but it happened somewhere around 2020, 2021. And what that allowed them to do was to be able to focus on just one ticker. So generally, traditionally, I should say, an ETF is a collection of different tickers, a collection of different companies, and like the goal is that someone's managing that fund, and whether it's a dividend paying fund or just simply a growth fund, um, you generally expected it to hold a lot of different companies. And so some of the laws changed that allow these kind of things to become possible. Now there's
Mm.
restrictions, and that's kind of the reason why YieldMax does do some of the things that they do, because there are restrictions still. But yeah, just so that everybody understands why we didn't really see this stuff before, it's because of that. Like, so this is pretty brand new. I mean, even if it was 2020, that's only 5 years ago. This is pretty early in the game. And we can see that a lot of people are jumping into this, a lot of different companies. I mean, the Misty fund that we talked about, it's like a $4 billion fund that's competing with pretty much the biggest ones out there, period.
Hmm.
Yeah, all right. So before we leave this page, I just want to point out that its expense ratio is a 99, so it's like 1%. So this is how much you're paying for someone else to do all the work that we're going to go through here shortly. All right, cool. So let us go into the Misty sheet. This is actually here. I really want to go ahead and give a shout out to Retire on Dividends. He's got an awesome YouTube channel. Anybody watching here that is interested, like, you should go check him out. Like, the guy's great. He's the reason why I decided to invest into Misty, and it was him breaking down trades that allowed me to really understand the fund. I shared it with both Chan and Migs, and that started this whole thing. And we'll touch base on how we're doing in on this later. But for now, I kind of wanted to explain how this works. With any thoughts, guys?
Nope. All good.
Cool, cool. All right, let's dive right into it. So, there's going to be two ways that the fund can make money, and those two ways we're going to call the weeklies, and we're going to call it the synthetic. So what happens is YieldMax buys, like, basically synthetically buys the stock, so they don't actually own it, but it's all through options. And by doing that, they are able to pretty much follow what MSTR does. So if they go up, then the fund will go up. If they go down, then the fund goes down. But the thing about it is, since they're selling covered calls, then that means that they are going to be limited on the upside. And we'll kind of maybe give some of these examples to dive into that. Okay, so let's talk about weeklies here. So for example, this is what you download. If you go to the website and you go to that Misty website on YieldMax, you're gonna able to download all this information. And as you can see, there's tons and tons of trades that they do. And this is really confusing for somebody that's never done this, which, when we first jumped into this, that was us. We didn't do this before, so it was kind of weird. Like, what is this? Like, where are these calls and this buy and then these puts? And what is this? What's the sell? Like, all this stuff didn't make sense. And this is why I kind of give that shout out to Retire on Dividends, because he really broke it down and allowed us to understand it enough to create this sheet here. And so to kind of connect some dots here, anything that you see in this blue color aligns with the synthetic, and anything that you see in this green color is part of the weeklies. And so what this sheet's going to do, it's pretty automated. It's going to go ahead and count everything. And it uses the dates. So it's going to say, okay, when was the last time that Misty paid us? And then it's going to figure out, oh, these are the 4 weeks, because Misty pays on a 4-week cycle. So it's going to say, during these 4 weeks, whatever was done by the fund manager, that's how I'm going to calculate if we're making money or not. And so to like not bore with any of those numbers and how those calculations are played out, we've got these two lines up here. These rows are summaries of what's going on. And so for the past 4 weeks, Misty has made $101 million for the weeklies, and they've made $146 million for the synthetic. So if we add that up, we divide it by the outstanding shares out there. That means they've earned for every share, they've earned $1.30. Now, sometimes maybe our weeklies don't do well. Maybe the synthetic is not doing great. And so there's this implied volatility. Now, the implied volatility is really on MSTR. So this is not the implied volatility of Misty, but rather MSTR. And the reason why that's important is because that determines how much money you get paid if you're selling a covered call, for example, it's called a premium. So that tells you how much premium you're going to get. It's part of the calculation. So another way to look at this fund is based on that implied volatility. How did it do this month? And so for the last 30 days, it performed in such a way where this fund would pay us a 58% return annually, which for this dividend payment would break down at 96 cents per share. Now, because they made some pretty good money in comparison to that, that's not what we're probably going to pay. And so that kind of brings us to our guesstimate, right? Our guesstimate is what are we going to do? Generally, they pay anywhere between 6% of the closing price to about 10% of the closing price. And the closing price was $2 or $21.55. So 10% of that gets us $2.15. And then 6% of that is this $1.29. That number tends to align pretty well with our $1.30 that we made. And so that's why that is my estimate for how much we're going to get. And we won't know the real numbers until Wednesday. So those of you watching now, you can go check Wednesday and see how we did in terms of our estimate. Now, guys, do you guys have any questions on what I just answered? Because I know that this is really the first time I'm going over this sheet with you guys as well. And if you guys have questions, I'm pretty sure everybody else watching also does.
Pretty good, pretty straightforward, but just if you can just elaborate a little bit on that implied volatility, explain to them, how this works without it. Because really, right, everything pretty much evolved around what that number is, right? If the stock did nothing and just stood still all day, would you still make money? Or would we still, earn our weeklies and even synthetic wise? Maybe you can explain a little bit about how critical that implied volatility is.
Absolutely, absolutely. So the implied volatility is really how much does this stock change in price for the last 30 days? That's how we get that number. Based on that number, again, is how options are priced. So for example, just to take a look at some of these. So for next week, they already bought a bunch of positions. So this is, they bought a position here and they bought 1,800 contracts and they paid $5. And so, I'm sorry, they didn't pay, they got $5 credit per share. So you take that, you timed it by the 1,800 contracts, and you're going to end up with $907,000. That's how much they got paid to open up this position. Now that $5, if the volatility drops, they're not going to get $5. They may get half of that. And so that's why volatility is so important. And historically, MSTR has had pretty high volatility, like in the 80s, 90s, sometimes 100. And so they'd be getting way more money for opening up trades like these. And so because the volatility has dropped in the last 30 days, we're not making as much money as we normally could be making. Hence why, the dividend that we'd be getting here is historically more on the low end. Now, as soon as the MSTR volatility goes up, and we know that because Bitcoin hit an all-time high, and MSTR hasn't really reacted to that. So I'm assuming there's a delay in its reaction, but when it does, price is going to go up. That means volatility is going to go up. And then we're going to see these premiums pay us a lot more money. Now, I do want to kind of talk about how that also connects to the synthetic and the weeklies. Normally, if MSTR is not moving up and down too much, then we're going to be making some pretty good money on the weeklies. And the synthetic is there for when, the MSTR like ramps up very heavily. But in the same way, if MSTR were to tank, we would lose money on the synthetic. And so there's this balancing act of making sure that you're managing the fund in such a way that you're maximizing the amount of profits you're getting without losing too much upside and without getting killed on a downturn. And you know what? We have amazing fund managers at YieldMax. big shout out to them actually because MSTR kind of went down this month or these past 4 weeks. They weren't doing too great, and yet look at how much money they were able to make on both synthetic and weeklies. Like to me, that shows that the fund managers do a really good job. Great question, by the way, Chan. Any other questions, Meg?
No, pretty straightforward for us who have been looking at this type of spreadsheet from return on dividends.
Yeah, yeah. So again, like the main thing we want to focus on is these two up here. And earlier we did say that we wanted to get paid weekly. And so like for this sheet, the cool thing is all you have to do is just kind of choose the other ones. And this right here is what we're investing in. We actually chose the top four for now. This last one is based on Robinhood, and so we're keeping an eye on it, but not really investing in there yet. But yeah, all you have to do is switch, and it tells you what group it is, and it knows when it's doing what. Like for example, this one, the synthetic is losing a bit of money, but then the weeklies are making some money. So their current payment is kind of low, but they've got a couple weeks to change this and turn it around. So it's not that big a deal. All right. So the question was about pie charts. Like, so tell me more about that, Chan. What would you like visualized?
Like probably like the synthetics and the weeklies or um see how
Like,
they're performing each other, see what maybe what maybe the loss of the week, if we have had any compared to the wins kind of thing. It's just something just a little bit easier to see
gotcha.
other than just
Okay.
all numbers.
Yeah, yeah, I hear you. That's actually a really good suggestion. I think I might try to maybe do a time series, right? Where by date, let's talk about I guess our positions and how we're doing and what this has done for us already. So I guess I'll go ahead and start. For me, I actually discovered this in November of last year. And so I hopped in. I put a decent amount of money in, and I pretty much was getting dividends, since December. And I realized that this was amazing. I mean, in all honesty, I was able to pay my mortgage, like completely pay my mortgage with just Misty dividends. And so when I saw the power in that, I kind of brought it up to Migs and Chan. I told them like, hey, there's this investment out there, and this thing is kind of changing my life right now. I want you guys to know about it and jump in. And we had a couple talks. There was a lot of skepticism. I'll maybe let them
On
talk
some
about that.
people.
But it was kind of cool to go through this journey, and obviously like any journey, right? If you go through with somebody else, like it makes it that much more exciting. And I mean, I every month I was seeing these paychecks come in, and I couldn't believe it. I was like, this is too good to be true. Like, there's no way. Like, what's the downside? Like, what is the problem here? And so far I don't really see a downside. Like, obviously there's risk to everything, and none of the things I'm saying is investment advice. But I'm just sharing with you guys kind of the journey we've gone through. At this point, I hold about 11,000 shares of Misty. So
Woo!
I'm pretty damn happy with that position, guys. I and
Ball.
and
Yeah.
I just bought Plady, so I've got about 300 shares of that. Obviously, nowhere near the position that I have on Misty, but I'm building to the point where I'm gonna buy Tesla next, and then I'll probably buy Coney last. But yeah, like it's been tons of learning. Again, like this is pretty amazing. I'm very happy with the fund managers, and it's been a crazy journey that I've enjoyed because Chan and Mings are pretty smart guys, and they ask some tough questions, and I had to constantly learn to be able to answer those questions. And once they bought in, like they helped tremendously because they constantly teach me stuff that I don't know, and it's just been great to be able to kind of partner up with them. But yeah, you guys kind of speak to your experience.
Go Chen.
Well, for me was, again, back to what I was saying regarding investing for dividend, right? My perspective was just off. my whole thought process uh, about dividends versus only one way, right? That's more the traditional way and not this new, I guess, modern way of investing for high yield dividends here. And yeah, once, I heard, you know, uh, side income dad said a lot about, this wonderful thing that he stumbled upon and how great it was. But for me, I just could never get over the thought of just what dividends meant for me. It was just my mind had already been set that that wasn't for me. So I really didn't take what he was, telling me too seriously, right? Because my brain started fixated on a different path. So until finally, right, obviously, Migs jumped in and I was like, wait a minute, okay, let me take a second look at this. What is this, right? And then, the more I dug into it, the more I understood, the more the numbers kind of jumped out at me, right? It's like, wait a minute, all right? It's like, whoa, what? I could get this much if I put in this much, right? And not just your typical 5%, 10%, right? And that's when I was like, oh, okay. Then the pieces finally started come together and I started understanding it, right? And, just for a simple understanding here, just, not everyone who can, put in like, six figure or something for into this fund, right? Like for instance, if you had $5,000 laying around and you're like, yeah, you could, most people would just throw it into like a savings account where you get 10 cents back at the end of the month or something, right? So just in perspective, right? If you were to put $5,000 into this, like Misty, like just for instance, for this month of is it May, right? Well, into June now, but so $5,000, their current share price right now is $21.55. So you could get about 230-ish, 232 shares. Then you multiply that by, let's just say, what we were saying over here, a low of 129 and a high of 210, right? That's
Yep.
the government. Let's just
That's
say
right.
130, just to round it off a little bit. So 232 shares, right? Times $1.30. That's $301. Say $300. $300 a month back from your $5,000, right? I mean, I don't know any savings account or any kind of other investment where you can put that money down and get $300 back, right? And guys, this is actually a low payout period. So imagine if it's, $2 or $3 or even higher, right? But getting back to just, $5,000 get you a return every month of about $300. Like that is pretty good, right? And I don't know
Doing
any,
anything.
like, yeah, without doing anything to get that kind of return. So, obviously, $300 is it's not that much, but it's pretty great given the fact that if you do the numbers and you only put in $5,000, right? So imagine if you double that, 10,000, you'll get $600, right? $600 a month for doing nothing is pretty unbelievable, right? So that's kind of where I wanted to kind of paint the picture is like this new age of investing high yield dividends is it's insane. It's pretty awesome. And if you're not, familiar with it and you're not comfortable with it, definitely, you could start off a lot lower. You don't need to go, balls deep like us. Right. But once you get that validation, that first payout, then everything kind of validates itself. I mean, but for me, like I known these guys for so long that I didn't even get that first payout, and then I already kind of jumped in pretty deep. So I just kind of took their words for it. Once I understood, like, okay, did the numbers and it made sense. But yeah, like I was saying, this is this is definitely something that, caught my eye. And once I fully understood it, I was all on board. So I'm just trying to play that numbers game now and just trying to collect as much as I can. And yeah, trying to get that retirement, that early retirement that we all want.
Yep. So, what are your positions?
Oh, position, well, right now for Misty, 5,414 currently. And I got a little bit of that Plady, a couple hundred shares of the Plady, but I do want to add that Tesla. I think the goal right now for me is just whatever the share is, I'll try to get to where non-Misty, like for Tesla and Plady to pay me at least $1,000 a month. That way I could collect, on a on the week that Misty is not paying, either Tesla or Plady will pay me $1,000. So altogether, I can looking at, to get over, it fluctuates up and down, right? But if I can sustain like at least 10 to 12 grand in returns every month, I think I'll be happy that for right now. And obviously can slowly continue to build that position. But yeah, that's kind of the goal. Trying to get, 10 plus K a month in dividends.
Pretty good number.
Mhm.
Well, as far as for me, I remember the first time that I heard about it. It was had a phone call. I think I was on my way to work with side income dad. And then once I got to work and I parked, and then we started talking more about it, like it just kind of made sense right off the bat for me. And because I started making like my numbers in my head. Now like, well, let me see what I can do. I remember my first investment was 39 shares. Just to
Yeah.
test out the waters. And then that first payment that I got, I was like, what? I got $35 of 29 shares. I mean 39 shares. I was like, from doing nothing. So then that's when I started looking more at the videos, return on dividends guy on YouTube. And I was like, sure, man, let me try to increase my positions there. And then slowly but surely started investing more in it. So the second payout, loved it, continue to invest on it. And so far right now, um, my position on Misty is like 5,500 shares. And also I remember that while building that number, we side income dad and I decided to like try to improve our positions in it by buying funds on different weeks and then using that dividend payout on Misty. But then once we started doing that, we saw that investing in those other groups was actually a pretty good idea too. And so I started with Pallady, got like 200 shares. Then I increased it to about 350, 360. Then decided to build my positions every week on every group. So like Shan was saying, try to get somewhere around $1,000 payout every week. And so decided to go with Tesla, got about 1,000 shares. Then Group C decided to go with Coney because the Coinbase right now currently in the S&P 500. So like can't really go wrong. Went with another 1,000 shares in it, and right now that's where I'm at with my positions and enjoying it. Currently, like what is it like yesterday? I got my about $800 from
That's
Coney.
Tony? Nice.
Yeah, just for like doing nothing.
Hey, you said your first investment was 39 shares, right? You remember
Yeah.
what price point that was at, roughly?
So I think it was like 25 something.
20.
25 something.
Okay, so you invest this to start off, you threw in $1,000 roughly to test the water, right?
Yeah.
make sure you got paid and side income dad wasn't running a scam.
For sure.
Nice, nice. Okay. And I believe you're in the best position from both of us.
Misty. Yeah, yeah, yeah.
Your average, you mind sharing your average? Your
Think
average
it's like 20 something, I think, or like almost 21 for
five.
Misty.
Yeah, mine's about 24 and a half.
Hmm.
So
Yeah,
yeah, you're definitely you're the best off here. You're definitely well insulated.
absolutely, absolutely. I think I'm at like 25, like 25, 30, maybe 25 something for Misty. But yeah, that's an amazing position. And not to mention that Migs actually has already all four funds. Um, well,
Oh,
Cannibal
also,
and I are still building it.
yeah, and also on top of those 5,500 shares on Misty, I do have a small account for Misty on Drip,
All
which
right.
has been slowly increasing, I think, from like 300 to like 600 now.
Yeah, nice.
Yeah,
So
the
So
set
all
it
in
and
all,
forget
like,
it.
yeah, pretty
but your
much.
your total is 5,500 or more?
No, so it'll be like 6,100.
Dang. Jeez.
And I feel like at some point I'm gonna like divide all of my positions like in two and put some on drip and then other ones use them as income or other investments that I want to do.
Nice, nice. You mentioned Coney, and the reason why I wanted to like take a quick stop here is, I mean, you just got paid from Coney, and I wanted to point out that they're like already kind of making some money here. Like they just paid out, and they're already making money in 1 week. They already
Nice.
made $31 million. And so if they had to pay, you know, this coming Friday, they would already be ready to pay out 21 cents. That's pretty insane to me.
That's
Um,
almost as much or more than some of the weekly
exactly.
ETF funds.
Absolutely. And this is again the testament to the YieldMax, right? The YieldMax fund managers, they do a great job. I think when people don't understand how it actually works, how the number comes up to be, they tend to complain a lot. But these fund managers, man, they're doing amazing. If we had to do this work ourselves, it would be a full-time job, and I don't know if we would be able to beat what they can do. So I personally don't mind paying that 1% to have them do all this work. Like,
Yep.
again, like this is just mind blowing. Look at that, $31 million in just 1 week. Like you just got paid and they're already ready to give you more money. Like
Yep.
that's amazing.
Stress free
Um,
too.
yep, yep. Now, something that I want to point out, and while we're talking about these funds, is that a lot of times people talk about NAV erosion. And I want to talk about traditionally what that means. Traditionally it means like if there's an ETF and they pay money, and doesn't have to be an ETF, but it could be just a normal stock that pays dividends. NAV erosion means that they want to be able to hold a consistent payout. Let's say that there's a stock out there and it says I'm going to always pay 10%. Then because they held themselves to that standard, they have to pay you 10% at whatever frequency they said. Maybe it's like once a year. And NAV erosion happens when they didn't make enough money to pay you 10%. But because that's what they said they have to do, that's what they have to do. And so they eat themselves. They take that money from their own assets to then pay you, even though they didn't make that money. So like that's NAV erosion. Um, and on the other hand, these funds here, when you see the fund go up and down in price, like just on a daily basis, that is the market. That's the market moving. And so it's not the fund managers, it's the market moving. Now, yes, when they pay out the dividends, like any other stock, you're going to see the stock price drop by the amount of money that they paid per share. So if they do end up paying $1.30, then you're going to see this 21.55 stock price drop by $1.30. But again, where did that money come from? They came from here, from all these trades that they made throughout the month. They made money, and that's what allowed their stock price to go up. But on top of their stock price going up because of the value they're creating, it still also follows that underlying asset that they have, which is MSTR. And so NAV erosion is not really how this works. And I just wanted to point that out. I guess while we're on the subject, I want to talk about like return of capital, ROC. Sometimes you'll hear that if you're new to this fund, you'll hear that, Misty sometimes pays return of capital. And so that people will say, oh, they're giving you back your own money. Um, and there's some truth to that, but it's not always the case. Like for example, at the beginning of the year, I think the Misty price was above what it is right now. And so by the end of the year, if that price is still underneath the where it started at, then obviously like the fund would consider as losing money for the year. And they'll have to take that into account and reclassify all the dividends they gave throughout the year to balance their sheet. So, some of maybe like 50% of it might end up being return of capital. But that we don't know any of this information until the end of the year comes. So I wanted to point that out because they do report month to month, but that month to month report is not accurate. It's an estimate on whether it's return of capital or not. Now, guys, let me know. Did I just like mansplain the hell out of that? Like confuse everyone, or did that kind of make sense? Is there any clarifying questions here?
That pretty
No,
much makes sense.
it made sense, but just given the fact that if you guys are all completely new, anyone completely new, some of this stuff is probably gonna for sure be over your heads. But uh, there's plenty of videos and tutorials and everything on YouTube explaining everything. All you gotta just look them up. But yeah, don't get too scared about, stuff that we're talking about that you're not sure of. I mean, some of the stuff is a little bit advanced, especially if you're new to investing or new to dividends and ETFs and everything. So just want to put that out
Yeah, it's always good to do a little bit of your own research.
for sure.
Yeah, again, I'll give that shout out to Retire on Dividends. He does a really, really good explanation.
Mhm.
Um, I myself find going through these numbers like probably too much, and hence the point of this sheet. It summarizes all of it for us, so we can just kind of look up here and know what to expect. But I think that getting a level of understanding of each one of these transactions is going to help you like drastically understand this fund. And for that, I do think that, watching Retire on Dividends is a huge recommendation for me.
I agree.
Now, having said that, guys, I think we've been ranting for a while. So, this is the very first episode that we wanted to do. I know it was long, I know it was drawn out, but we were trying to give you a lot of information, a lot of introduction. Moving forward, we're just going to kind of give you our estimate on whatever is coming up. So, next week we're in Group D, so that means next week we're getting some test leads. No, next week we get that pay from Misty,
Misty.
and then the week after that we'll get some test lead pay. So
Yeah.
that's what we'll cover, I guess. Next Sunday we'll cover test lead and our estimate for that. But then after our estimates, I think we'll probably dive into what we see that's going on out there, in the Bitcoin world, in the crypto world, and just what we learned that week or whatever it is. We'll try to cover that.
Yeah,
Um,
that'd be interesting. Super interesting. Yeah.
all right, guys. Well, I guess that's it. If you guys have nothing to add, I just want to say thanks to everybody for watching, for hanging out with us, and hopefully this becomes part of your Sunday routine.
Nice. Thank you, everyone.
Okay. Peace.